So before I start, I would like the VCs and investors in the room to raise their hands. Just want to see how many of there are. Okay, so there's a chance I will piss off many of you today. So I apologize in advance. And I haven't told Sandra this, but I don't think I'm the right person for speaking about how to raise money, because I'm frankly quite a bit against raising money, particularly from institutional VCs, for a few reasons that I'll talk about over the next 15, 20 minutes. Now, I made an interesting discovery recently. I don't know if you remember those brilliant jokes about lawyers. You know, what's 5,000 lawyers on the bottom of the ocean? A good start. Or how many lawyers do you need in order to screw a light bulb? None, because lawyers only screw us. Well, what I discovered was that that works particularly well with VCs as well. If you replace the word lawyers with VCs, you know, what's 5,000 VCs on the bottom of the ocean? So, yeah. I'm just kidding, by the way. Now, I'm going to talk about three things today. Number one, why you shouldn't raise money from VCs. Number two, if you decide to raise money from VCs, who to look after, or what to look after. And number three, the one secret that I think will make any VC just literally throw term sheets at you. Provided that, of course, you have a compelling startup. There's this story I heard recently about this British actor called Daniel Day-Lewis. He's very well known for movies like Nine or There Will Be Blood. And besides being a brilliant actor, apparently what he does is wherever he goes, he has a notebook with him. And in his notebook, he writes everything he sees about the people around him, expressions. Can you imagine him having a fight with his wife? It's like, honey, sorry, I just need to write down the expression of your face right now. And I've done that a lot over the past couple of years in meetings with VCs. So while discussing with VCs, I've just scribbled down the various thoughts or the things that they've told me while speaking to them. And one of them was very interesting. I was in a meeting with a VC, and we were talking about metrics. And I had a slide up on the screen with a bunch of metrics, and one of them was CTR. And CTR stands for click-through rate. And at one point during the conversation, the VC looks at me and says, okay, so what's your why is your conversion to revenue rate so low? So I thought about it a little bit, and I didn't really know what to answer. The guy obviously didn't know my business because he didn't know what CTR means. So while talking about why I think you shouldn't really go for VC money is because, number one, they really don't know much about your industry. I think I've met about 100 partners in VC firms over the past few years. And out of those, I only met one that knew my industry better than I did, and that understood my business as well as I did. And I think you should not raise money from an investor unless they understand your industry much better than you do, and your business at least as well as you do. Or, you could just take the money, but you risk in ending up in the same way as a marriage. Marrying for money, you'll end up with a nasty divorce. The problem is that with VCs, they usually take the child. So not good. Now, a little bit about myself. I founded three companies so far. I started a company in university, software development business that we started in my first year in university, and it was acquired right out of university without any external financing. The second one, called Brain TV, was an online TV channel, one of the first online TV channels in Romania. We called it TV for Smart People. And I did all the wrong things with that business, including raising money from the wrong people, positioning it completely wrong, arrogantly as TV for smart people. And after about a year, we had to shut it down and move over because it was spending tens of thousands of euros a month, not making much. And the third company is called Brainy, and it's a video advertising technology company. I moved to London for this company, and things have grown very, very well so far, and I'll speak about that a little bit. This has been my these have been my entrepreneurial ventures. So I want to share some of the learnings with you, some of the stuff that I've learned over the years. And again, the most important thing I've learned in my Brain TV experience was not to raise money from someone unless they really understand your business, and unless they understand your industry better than you do. Good. Now, I said that investors have no clue about your business, or 1% of them only have a clue about what you're doing or the industry you're in. And I've discovered this while speaking to a lot of them. The second thing I've discovered is that investors have a lot of ideas, and that would theoretically not be a problem, but they're usually bad ideas. And I discovered this in my first company. All my companies have had the word brain in them, right? So the first company was Brain Labs, the second one was Brain TV, now Brainian. And with Brain Labs, at one point we got a term sheet from an investor. And the term sheet was good, the investor seemed reasonably intelligent. However, in the discussions, they are, yeah, some of them are. In the discussions with the investor, I realized that the reason he wanted to invest in a software company in Romania was because he had a lot of ideas that he wanted us to build for him. So that was, it didn't feel right. It didn't feel like he had the right reasons to invest in the company, so we decided not to. And the third thing I discovered about investors over the years is that they have no time. And you can't blame them, really. They have millions of euros to spend on behalf of their LPs. They meet 15 to 20 companies a week. And unless they focus on one particular industry, they have no time to really understand your business, understand your industry, and be able to help you. So these are the three things that I've learned about VCs and why I would advise of not raising money from institutional VCs. However, the reality is that startups need to raise money, and we need capital in order to grow. And the best way I found to do that is to raise money from angels, super angels, or VCs that used to be entrepreneurs. And there are a few reasons why I think you should do that, and I've done that for Brainiant. At Brainiant, we raised $800,000 last year from a few investors, including Dave McClure in the Valley, including Sherry Coutu in the UK, who's a very well-known investor, or Arts Alliance, who are the investors in Love Film and Blinkbox and Shazam, and a lot of companies you might know. So the reason I've done that is that because angels have a very different approach than VCs. For one, angels are usually people that have had a company, successful company, exited, and are investing their own money. Therefore, they will only invest in an industry that they know, that they understand. So chances are that they'll know your industry better than you, and they'll be able to understand your business. Secondly, although angels do have a lot of ideas, they've been entrepreneurs. So they know that the worst thing you can do to an entrepreneur is give him ideas, because we all have ideas. Entrepreneurs need focus. I think that's my problem. So angels are very good at that. They're very good at understanding where your business is going, understanding where the industry is going, and helping you shape direction and helping you focus. And the third thing, angels and super angels invest their own money or their friends' money, which means that they'll make the time to spend on understanding your industry or your business, because it's their money. So if they lose it, it's not like the LPs get pissed off, but the wife gets pissed off. So I think these are three reasons why you should raise money from angels, super angels, or VCs that have an entrepreneurial background. Now, I've tried making a parallel between VCs and angels, and I came to the conclusion that VCs are a lot like parents, whereas angels are a lot like siblings, right? Parents always tell you what to do, and they reprimand you if you take bad grades. However, angels, a brother will take you out with him to meet his friends if you're cool and don't embarrass him. They'll help you out when you're being bullied, and be with you whenever you have your heart crushed or whatever from a previous romance. So I think VCs are a lot like parents, and angels are a lot like siblings. I'm not sure if that's the right parallel, but it helps me visualize, who I should really spend my time with. And that pretty much sums up, my opinion on why you shouldn't raise money from big VCs and go more for angels, super angels, and entrepreneurial VCs. And the good news is that there are a lot of super angels right now. Super angels are angel investors who used to be entrepreneurs that are investing other people's money, usually their friends' entrepreneurs' money. So they're very good because they can easily sign checks for anything up to $1 million, which is quite useful. And number 3, I said I'm going to talk about the one secret that will make any investor give you money. And everything I learned about raising money, I learned from dating. A few years ago, I was in a club and I saw this girl, and she was super, the model type, super hot, beautiful face, great smile, the whole pack. And after a couple of glasses of whiskey, I made courage and I went up and started chatting to her. And initially she was quite reserved, but we started talking and she became a bit more relaxed. And after about 20 minutes, she got my phone and entered her phone number, so I was like, yes. The next day, I call her to invite her for dinner. No answer. I text her. No answer. A bit later, I call her again. She answers, and she said she was ill or had a cold or something. A couple of days later, I text her, do you want to go for dinner? She didn't answer. I call her. She didn't answer. I text her again. She says, oh, I'm in the countryside with my parents. And we did this back and forth, back and forth, back and forth for like 2 weeks. And then after 2 weeks, I think she was just, okay, I'll go for dinner with you. Just give me some space. So we went out for dinner, and we had a great time. And, I felt everything went very well. And after the dinner, I texted her. I said, I had a great time. Very nice to have spent time with you. No answer. So I'm like, fine, okay. I continued doing this, and I was pushing, and I was trying, and she was not, and she was. And we had this sort of thing for a few months, but it didn't go anywhere. So I was 20 back then, so I didn't know much about it. I was speaking to a friend of mine who was obviously much more experienced than I was in this whole thing, and he's like, dude, you're doing it all wrong. I mean, best way to date or pick up very, very interesting girls is play it cool, not interested. So I did that, and I stopped texting, calling, emailing, sending her flowers and all that. And after about 6 months, right, I cut everything, nada. And after about 6 months, I get a text, and I was like, hey, do you want to have lunch? From Mihaela was her name. And I'm like, won't answer. There you go. The next day, I get a phone call from her. Hey, how are you? Do you want to have lunch? Oh, I'm sorry, I'm busy. A lot of work, company's going well, can't do it. She's like, okay, no problem. After about a week, she texts me again. Hey, do you want to have lunch? I really wanted to have lunch this time, but I wasn't in town. So I'm like, sorry, I'm not in town, but we'll see. After about a month, she calls me again. I was in town, so I'm like, yes, let's do it. We went, we had lunch, it was a great time. I played it cool. I didn't really show her that I thought she was amazing. And right after the lunch, she texts me. She's like, oh, I had a great time. So I was like, yes. And I've learned over the past 2 years that works very well with investors as well. And once you've managed to get a meeting and you went in there and presented something really cool and you got them excited, just play it cool. Don't answer the emails. They call you, put the assistant on the phone. Just play it very, very cool. And it sounds incredibly counterintuitive, but I'm sure it will work. And of course, that provided that you have a good enough startup proposition and you've figured out everything when it comes to your business. So that's the one secret that I've learned on how to get investors to throw term sheets at you. So by this time, I saw a couple of VCs leaving the room. I've probably alienated everybody who has money in this room. So I apologize. I'm almost done because I'm running out of time as well. But in all seriousness, I think raising money can really make or break your startup. And it's a lot like a marriage or like dating someone. You need to find someone that you really trust, that really you really respect and that expects you, that has that you feel very comfortable with and has a lot of knowledge about you and still feels comfortable. And you need to be able, both parties need to be able to, or need to be willing to invest time in it. So there you go. Raising money is a lot like getting married, and I think if you approach things this way, it's very unlikely that you will fail on this front. There are many other things that could make you fail, but raising money from the wrong people can definitely break your startup if you don't do it right. Thank you very much.
Emi, thank you very much.
Thank you.
It wasn't the advice we expected. It's nice to hear your view on things, really good. I probably should tell you the real reason why that girl wasn't calling you all the time, but then I'm not sure if I should do that with so many people around.
Must be the shoes then.
Yeah, the red shoes. What's with the red shoe? Last time I saw you, you were wearing them as well, so it's a thing.
Yeah, so when in one of my first investor presentations in Paris, I was in Paris in February 2009, I think, at Seed Camp. And I presented on stage, and after the presentation, an investor came to me and he's like, yeah, I'm not sure about the business, but your shoes are awesome. Let's talk. So I was like, okay. And I was wearing a pair of red shoes, right? So I was like, okay, this is interesting. Red shoes attract attention, make it memorable. And so I decided to wear red shoes whenever I go to a public event and speak or present or just I'm around, because people recognize the red shoes. So they're like, oh, you're that weird guy. Yeah. And it works, yeah.
Well, thank you very much for your time.
Thank you, yeah.